The month of June is here, and growth stocks have run very hard year to date. And so you're wondering, what stocks can I buy now? A lot of growth stocks have jumped aboard the AI hype train, but not all of them. So a couple days ago, I shared my 7 best dividend stocks to buy, and today is going to be growth stocks. So this video was very hard to make. And what I did is I said, all right, if I had a bunch of cash and I was trying to put it to work, what are some opportunities to explore right here? So this is going to be rapid fire, 7 stock picks. It's going to be really a range from value growth to speculative growth, and I'll identify those as we go. Let's dig in. This first stock I've been covering since IPO, and I've owned shares since the IPO. And I know this company very well, and on YouTube and in Discord for the longest time, even in 2021 when this thing was running crazy hot, I was telling people don't chase it, don't pay over $150. And during 2022, I even said that the stock could go below $100 a share. And I'll be completely honest with you, even though I was saying it could go below $100, I didn't know if it would actually happen. And it got to $92 a share. Now, like I said in the intro, this is hard because if you look at this, it's up 60% from the bottom. And that's going to be the case. If you're not buying in a bear market in 2022, at some point, you're going to have to pay a premium on the other side. Now, I think you have to be careful chasing, but I do like Crowdstrike, and I'm going to give you some price targets and some commentary on it. Crowdstrike just had earnings last night. They beat by 7 cents. This is Q1 non-GAAP EPS, 57 cents. Revenue, $692.58 million. That's up 42% year over year and beat by $16.35 million. So the headline was Crowdstrike slides 10% pre-market despite upbeat outlook and strong results. I thought the earnings report was great. So this stock did kind of a snowflake where it pulled back after earnings and then buyers quickly fled into it. So if you look at a chart here, it's $141.75 here just on Wednesday. Now it closed the day at $157.55, down 1.61%. Now, I'm recording this video on Thursday, so the stock's going to have some action tomorrow before you see the video. So this is the CrowdStrike earnings transcript. This is the CEO, George Kurtz. Let's start with AI. Since inception, CrowdStrike has been and will continue to be at the forefront of leveraging AI to drive better customer outcomes and efficiencies within our business. Now, if you watched my top 10 AI stocks to buy for the next 10 years, this was a stock that was covered. Now, SentinelOne just reported earnings tonight, and they're down 35% after hours. And I've been telling you on YouTube since 2021 that CrowdStrike is the king of endpoint security. I've been ridiculed for years, people saying that SentinelOne is better, blah, blah, blah. Now I could make a whole video just talking about that one topic, but we don't have time. I'm going to move on, and maybe later on I'll do a video comparing them again. I've done 2 videos in the past, and I need to do an update video here on that at some point, round 3. So it talks about utilizing AI benefit our business. One example of AI benefiting our financial model is Falcon Complete. For years, our use of AI has enabled us to rapidly scale that business to a leadership position. And this is funny. While others are now jumping on the AI bandwagon, I call it the AI hype train, we have transformed cybersecurity with an AI-powered cloud business from inception. Generative AI is transforming the world, and security is no exception. So he's saying they expect LLMs, so large language models, to become commoditized over time. The data on which they are trained will not. CrowdStrike is uniquely positioned to benefit from this new technology. So the 52-week low was January 10th, 2023, and the 52-week high was August 11th, 2022 at $205.73. Now this is a large cap, about $38 billion market cap. And you can see CrowdStrike has had solid growth. Valuation is always a little bit tricky. This is software as a service or SaaS. So this has recurring revenue. And you can look at a price to sales. In this case, it's 15.37. We like to look at EV NTM revenue. Now it's trading right now about 11x. And that's not cheap, but historically it's been oftentimes over 20. And I'm not saying you should buy the stock just for that reason. But what I'm getting at here is that we've been talking about buying this stock, under $150 for a long time. And over that time, it's grown significantly over those 2 years. We're talking about 8 quarters of earnings. So if you look at the PE, next year's estimate, according to Fidelity, 52.7. This company is really growing into profitability, and it's a beast. I've covered this stock many times on the channel before, but they deal with a lot of very large customers, and they continue to expand their footprint within those customers with that net-based dollar retention. So every single Wednesday, we do chart day in Patreon Discord. Anytime you see orange, it's a previous chart day. And you can see back here, we talked about possibilities that could go even lower, down to $69.90. The charts were that bad. Now it bottomed out at about $92 $92 a share. Our first possibility here was $92.50, so it's pretty much spot on with that. And you can see it's ripped from that low in January, $92.25. It's ripped all the way up here to $157 right now. So right now, Crowdstrike has support around $140. And what I think will happen here, if it stays bullish and it holds that support, it probably goes up to 175. So these are Fibonacci pivot points. That's basically an R2 at $175. Now there's no guarantee. It could certainly break down and come back down. I prefer to buy this stock below $150. I always have. But I do think that earnings was solid, and I think there could be some momentum here, and the stock could consolidate a little bit here. Maybe if it pulls back a little bit, it might be an opportunity to buy, and I think it'll consolidate and go higher. So keep an eye on it. It's certainly not a cheap stock, but you could argue it's one of the lowest valuations it's had. Now, I recently did an Enphase Energy deep dive on the channel, so I'm not going to cover this in a lot of detail, but there's an update here. So Enphase Energy is expanding its footprint in Europe. Enphase began production and shipments of microinverters from its contract manufacturer Flex in Romania earlier this year. With the Flex Romania factory, the company has increased its global capacity of microinverters per quarter, enabling Enphase to improve delivery times to European customers while addressing the region's rapid growth and demand for residential solar. And this partner has been active since 2004. So I think this is a great partnership. We talked on that video, that deep dive video, about the possibilities of expanding more internationally, that could be one of the tailwinds for growth. So again, we do chart day every single Wednesday, Patreon Discord. You can check it out. Go to patreon.com/firedupwealth to join us live every single Wednesday morning. When you see orange, it's a previous chart day. Yellow is the most recent chart day. Now, this was from this Wednesday, so a few days ago. And on chart day, I talked about, YouTube video nailed this. Heading back to 200 level, likely. $212 is the R1. I think that's a possibility. It won't happen overnight, but I think that's where it's probably going to want to climb up to next with some time. Now, this stock was $340 back in December 2022. And somebody asked me on chart day to look at this. And I said, if it's me, I'm waiting for below $200. That's literally what I said in chart day. And of course, it got below $200. So $152, that's a strong opportunity there. But I like the stock even where it's at in this $180 level. Now, with that said, the RSI is a little bit overbought. So I think you could have some consolidation soon, maybe just a little bit, and then it's going to probably rip a little bit higher. So I'd put this on your watch list. If it goes back in the 170s, I'd really like to see it, 170 to 180, I think would be a good entry point for this. And you might not see that. It could just climb from here, $181 and go up to $200. That could happen. Obviously, there's no way for us to predict if the market's just going to be bullish and we're going to have a face ripper, market rally. We also could have issues with the debt ceiling. It might not get passed and the whole market could sell off too. So the range here, it was $152. Right now it's $181. Anywhere in that range, if you're buying and dollar cost averaging, if you're holding this thing for 3, 4, 5 years, you're probably going to be pretty happy. So I said to you guys, on a previous video that I prefer this stock, really below like $155, and it got to $152. So that would have been the opportunity. And I did buy some in the community portfolio. But what I'm telling you is even though it's run a little bit, it still looks good in the chart. This is a bottoming process here, and I think it's going to bottom out here and go higher with time. Now, earlier this year, we also did a deeper dive on Shopify. It was in the 40s, and I said it was a buy. If you don't subscribe to this channel, if you're new here, definitely subscribe. Click the bell for notifications. We've been crushing it here on Fired Up Wealth. Now, it's another one where this stock has run really hard, 52-week range. This was $23.63, October 13th, 2022. And it topped out here May 10th at $65.54. What happened is you had earnings, you had some positive news, a catalyst. The stock, rallied up to $65 and it consolidated and pulled back. So we discovered Shopify on Wednesday's chart day as well. So in yellow here, this is a few days ago, $52.10 support, look for $68 plus possibility. Now I did say on chart day that I didn't really like it necessarily where it's at because it's above its moving averages. You're really kind of chasing it here. I did some more work on it, looked at it. I mean, of course, if you were bullish, you probably bought the stock much lower. But I'm looking at this stock and saying, can it come down lower? I think it can. But if it holds this $52 level, it probably goes up to $68 and maybe even $75 on extension. So that R2 is right here, $68. And then the R3 is up here, $75. So basically the numbers I just told you. Now I'll be completely honest with you. I don't like buying stocks when they're in this uptrend like this, when they're above moving averages. But some people, this is how they buy. They like to buy on momentum. I generally like to buy stocks when they're selling off and I buy them kind of on the way down. A lot of people disagree with that. And so if I look at this and I look at the setup here, it has a better chance of going higher than lower. But this certainly could break down anytime. I'm just thinking of this as a long-term investor. If I'm trying to put some money to work and I'm thinking about holding the stock for 3, 4, 5 years, I think Shopify will be worth more than $58 in 5 years. And I dropped a Real Talk podcast on the Patreon community the other day. There's so many people, especially on social media, they're talking about, oh, this stock, it's sold off, and this stock's doing bad, it's not performing well. And then you look at the chart, it's up 50% year to date still. As investors, you have to have realistic expectations. I think so many people got in the mindset 2021, stocks go up every day. 2022, stocks go down every day. And now they want to be back in the stocks go up every day mindset. And we certainly have some of those names, especially on the AI hype train. But be realistic with your expectations. The S&P 500 gives you a 10% annual return with dividends. So if you look at like a Shopify, if that stock does what it's supposed to, that company does what it's supposed to do, it's going to outperform the market. But it's not going to be a straight line. It's going to be volatile. And it's not for everybody. It's more of a speculative type name. But I do think it's attractive, especially on a pullback. Check out Shopify, ticker is SHOP. Now, this is a tough one, and I even debated if I should put it on here because I know it's going to be a love-hate type of stock. You probably either own it and you're a bag holder and you might hate it, or you're still cheering for it, hoping it'll go higher. Or if you don't own it, you're going to say something like, well, it's not a growth stock, it's not a value stock. What is it? It's a 26 PE ratio, PayPal Holdings. 52-week low is $58.95. That just happened May 26th. I think it's really bottoming out here. And the high on this was August 16th at $103. So this, for me, the buy, it's mostly on technicals. And really, if you look at the fundamentals, it's not a bad price at $60 a share for what you get. PayPal does have pretty strong fundamentals and strong balance sheet. It's just that the growth is slowing down. So price to sales ratio 2.52. Price to free cash flow 17.83. Price to book 3.5. That PEG ratio is 1.66. Generally, if you can get 1 or less, that's really attractive, but 1.6 isn't too bad. And then PE based on next year's estimate is 10.9. And PayPal does have a couple new innovations that I think could be a catalyst for them longer term. So they have a suite of unbranded solutions. So they've got Braintree, and then they got PayPal Complete Payments. This is PPCP. If you're not familiar with these, definitely research them more. PayPal also recently entered a partnership with Visa to expand P2P services. And it has an interesting project going on in the realm of stablecoins. So valuation-wise, you're looking at like a 10x earnings per share. So that's not really that bad. Now, we did talk about this one as well on Wednesday for chart day, and I said earnings were not that good, broke bottom of the range. So previous chart day, we said the range is 65 to 85, and it did get a little bit lower than that. It got down around 58 bucks. And you can see here, these candles, it looks like it's trying to bottom there off of that. So we said that 49 to 55 is possible. I think that still is possible. If the market just tanked, it could happen. But it is looking to bottom here. And if I look at the valuation, it's pretty attractive. Now, this is not going to be a stock for everybody, and this might not, recover very soon. It could take a long time, but it's trading, really at a 5-year low. So it's actually down 25% over the past 5 years. So it's about a $70.35 billion market cap. And since it went public back in July of 2015, it's up 81.75%. Year to date, it's down 15.46%. And over the past year, it's down almost 29%. So I do think PayPal has been punished enough. If you can get this stock below $60, I think that's a decent opportunity. And it does have resistance right now around $66.50. So what it's looking like it's doing is it's probably going to try to break through that and have upward momentum. Now, if it doesn't break past this $65, it still has pressure, and you could see it come back down in that 50s level. So again, that $49 to $55 level is possible, but right now it looks like it's trying to bottom. If it can capture that $66, it could have some upside momentum, and you might see this stock in the 70s. So check out PayPal. It might be for you. It might not be. Do your own homework. PYPL. So of course, when we're doing a video like this, we're trying to identify stocks that haven't run really hard. There's going to be names that are going to be love-hate type names. There's going to be probably names on here that you don't like. And this next one's probably a great example. There's a handful of people that are very bullish on this company, and then a lot of people that just aren't, and they don't really see how it can really grow in the future. They look at it as a pandemic play. But again, the names like NVIDIA, everybody already bought them. So what are some opportunities out there? This one, in my opinion, is an opportunity. So this is Etsy. It's trading right now at $82. The 52-week range is $67 to basically $150. So this does have $92 resistance, and under $92, it could see more pressure, especially if the whole market sells off. So this blue line down here is $75, and that's possible. It could bottom anytime. It could certainly go lower than $75. $75. I've been telling the Discord community that I like this stock, under $100 DCA, $85 or less is really the target area. Said that you could see 70s with some more pressure. This is previous chart days. This last chart day, I said DCA below $100. Of course, it's under $100 and it's in my $85 or less target area. This is really what I was waiting for, is 85 or less. And the downside prevails again with 92.10 resistance. $74.50 to $85 is really the range that you'd probably DCA. And it certainly could go lower than that, but I do think that this company will do good things longer term. Now, if you go into recession, this is not going to be a stock that's going to do well. This is consumer discretionary, and you're thinking about arts and crafts and customized gifts. People are not going to be spending money on this type of thing, and that's part of the reason why this stock is being punished. So if you're buying this, you're really accumulating shares, and you're thinking 5 years out. Now, with all these stocks, I could spend an hour talking just about Etsy. There's lots of opportunity for growth, especially international with Etsy, and it's not just what you think Etsy is. There's much more to the company. So just real quick, they've got these different brands. They've acquired these companies. So they've got Etsy, Reverb, Depop, and Elo7. So Reverb is for buying and selling musical instruments. Depop is about fashion. So it's Gen Z focused, has strong brand awareness in the United Kingdom and the United States. So you can buy and sell unique fashion. So you can buy a shirt and wear it a few times and you can sell it. And that might not be your forte. I get it. And then Elo7 is the Etsy of Brazil. Founded in 2008, provides a marketplace for unique custom and made-to-order merchandise in Latin America. So basically, it's just the Brazilian version of what Etsy already is in the United States. So I won't spend any more time on Etsy because I know there's probably a lot of people that don't want to hear anything about Etsy, but check it out. I'm telling you that there's an opportunity here longer term. Ticker is this Etsy, ETSY. Now, I just did a deep dive on Airbnb as well, so I'm not going to spend a lot of time going through any fundamentals. If you want to learn more about Airbnb and the most recent earnings, check out the video on the channel. So looking at a chart, this is a previous chart in orange. Earnings double beat, but lowering expectations next quarter. Are they sandbagging? That's a possibility. We said possibilities for the stock, basically $104.60 to $85. So the last time I talked about Airbnb, I said I like it $105 or less DCA. At one point, I even said 110 or less DCA. I prefer this stock below $100. And the problem is just, it might not happen. So if you're really bullish on it, you're probably nibbling some at $110. If you're just creating a watch list and you're buying opportunity, I would wait for this stock. I think it's possible that you could see it, especially in the 90s, but maybe even in the 80s with time. This has $117 resistance, so it could climb up to 117 and it could be off to the races. You can see this thing pop much higher. And it does seem like Wall Street institutional investors, they do like to kind of pile in this name at times. I think there's just some uncertainty right now with what's going to happen in the next couple quarters. But any sort of positive news, and I'm telling you, this stock's going to rip. So I'd love to get this stock, at one point last year, just in December, it was $82 a share. And I'd love to see it back in that level, but it probably won't happen. But I do think longer term that even, $105, $110 Airbnb, if you're looking at opportunities that are out there where stocks haven't run ridiculously hard, this is one that fits the bill. So I've got one more stock. Before I go on, I need to announce this video is sponsored by The Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. You can also join our private community, Patreon Discord, by visiting patreon.com/firedupwealth. And if you're new here, please subscribe to the channel. Click that bell for notifications. My goal for this year was 40,000 subscribers, and we might get that by June 4th. So let's see what we can do. And of course, if this video is helpful, drop me a like and a comment. I appreciate you. So a 2021 darling, metaverse. Oh my goodness, the next big thing. That ended up being a big bubble that popped. Now we've got the AI hype train. But the thing is that Roblox really isn't a bad company. And this is another one that you either kind of love it or hate it. And I think a lot of people just don't understand it. But Roblox is doing something right. Despite the disappointing draw the metaverse has been thus far, the numbers say so. Take revenue and bookings, for example. Top line reached a record $655.3 billion last quarter, while bookings, which is use of the game's virtual in-currency, the Robux, reached Q1 record $773.8 billion. So in the blue here, you can see revenue in millions, and then this is bookings in orange. You can see the bookings have dropped down, but revenue is going up. And then daily active users, another metric that you look at, and hours of engagement. Both of those are still going higher, even after the pandemic. Record levels last quarter. 66.1 million and 14.5 billion respectively. That's a huge number, 14.5 billion. Just think of that for a second. This is 14.5 billion hours in a quarter. And I agree 100% with this author. It's not for everyone, but it is for some. So Roblox, the 52-week range, 23.88 and 53.88. It's trading right now at 42.13. I like this thing. I like in the 30s better, really dollar cost average under $40. So if you get a little bit of a pullback here, you can see it's forming a nice base. And I think over time, it's going to be worth more. I'm just trying to, again, identify growth stocks that I think will be good long-term opportunities, 3, 4, 5 years out. So big range here, 52-week range, 23.88 to 53.88. It's trading right now at 42.13. I really like this stock under $40 DCA. It's looking like it's forming a base right now, and it might not actually come below $40 a share, but if it does, that'd be an opportunity. Right now, the charts tell me that this might want to go a little bit higher, maybe in the high 40s. So there it is, 7 growth stocks to explore. Of course, this is never financial advice. Hope this was helpful. Make sure you drop a like and a comment, subscribe to the channel. Have a great rest of your day. Take care.